All right, good morning. It's Friday. You made it. Welcome to QuantBox Live. It's time to get your macro on. It's 6:31 on Wall Street, 3 hours before the trading begins. So over the next little bit, we're going to uncover the best fundamental opportunities across the globe through global macroeconomic analysis, particularly quantitative analysis, and very particularly comparative analysis of quantitative data. Anyways, my name is Wayne McDonald. I am a trained economist. I'm the real deal. I actually have a degree. Cool. I've also been trading in the financial markets actually before 2004, but professionally since 2004. And before that, I was a venture capitalist. So I was an investor, but in a different way. But nonetheless, we use at QuantBox AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality, and actually quite a bit more to identify trends, but more importantly, why money is moving. That's what we're constantly asking. What is moving and why is it moving? And where is it likely to be in the future based on, again, quantitative analysis of economic data? So if you're watching this on YouTube, guess what? It's many hours delayed. It's not 6:30 in the morning for you. It's probably 10 or 11 in the morning. So many hours late. Why don't you swing by quantbox.co and try the trial? It's $8, YouTube. YouTube, it's $8. You're like, what is it going to do for me? Well, ultimately, it's going to give you confidence in why you're trading. It's going to give you confidence in your trades. And most particularly, it'll give you enough confidence to let your winners run. Yes, you should always keep your losers small, but you'll never make it in this game if you don't let your winners run. It's a universal truth of trading. QuantBox will bring you that confidence. Anyways, anyhow, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Your $8 trial includes a macroeconomics course and a statistical analysis course. Yeah, for show. More than 12 hours, closer to 20 hours. Let me log into the right account. Boop, 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 boop. There we go. Logging into the database. QuantBox is not a website. Logging into the database. Come on now. Thinking. Ba, 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 ba. Okay, so here we are. Oil up again. 10-year T-note still not coming down in yield. Very flat to bearish market here. 4.3. Remember, a month and a half ago was 3.99. So that means it's bearish as far as price and bullish as far as yield. Gold, okay, about the same, still in that sort of range, trying to work its way back up to 1950, which is good because this was down for a bit. S&P 500 rallying back, 4,500. Yeah, that's good. That's good. Well, if you're a bull anyways. Euro dollar, well, up slightly. Bitcoin, it says up 1.25, but what it doesn't show is the volatility in that asset has been, crypto. So, wow, look at all this. So you can see right here, looking at the mini scatter plot, the DAX is way up, Bitcoin's way up, the Nikkei is way up, the British stock market, the FTSE is way up, NASDAQ is up, S&P 500 is up, Dow is up. That's all risk on, and I'm a bull on every single one of those. Yeah. In fact, if we zoom, let me open the. If we zoom in a little bit, and by the way, I reorganize things just so it's easier for you to find. I I remember I put them into little tabs because there were so QuantBox had so many tools. Like it's so much. You get so much, right? So I tried to organize them, and then you're like you couldn't find anything because it was all organized. So like a teenager, I'm just going to throw everything onto the floor so you can find everything. So it's all over there. So you're like, where's the scatter plot? Oh, there it is. Okay, cool. So we look at the bigger version of the scatter plot, and nothing's down. Wait, what? Nothing is down. Is that funny? When was the last time we saw absolutely everything up? Rare, huh? Yeah. So everything is up, but what I want to show you is like you see a lot of yen pairs up. Okay, that's something that we expect through yield curve control, but also seasonality. And all these stock markets up. Now, maybe it has something to do with the ECB. Maybe it has something to do with the Fed, retail sales. What about today's industrial production and capacity utilization statistics? Yeah, maybe that's what's moving all this. But in the back of my mind, I, I have to admit, I'm thinking way back in January, I said this week and next week are going to be bullish weeks. Third week of September, right? And so I look at that and I smile because I'm like, it's showing up. And I said, the real risk, the real likely risk, and again, I'm talking about what I said in January, is that the market kind of breaks your spirit. You sit there and you waiting in this period from the third week of August to the third week of September, and it goes up and down. There's high volatility. You get in some trades. The trades work for a while, then they don't work, and then you start crying a river. And there's all these violins in the background. Oh, it's so sad to be a trader, right? And boom, then it sets up double bottoms. Remember that scenario? It comes, it takes off in the third week, comes all the way back, sets up in the third week of September, and then takes off, but you miss the second chance. And I said, that's the worst case scenario, worse than if it just collapses and it's just down, down, down. See, if it's down, 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 you're not buying, because if you're a bull and the market's falling, you bulls don't buy falling markets. Okay. You're either a bull or a bear, or you're a pig. Pigs would buy on the way down, and pigs get slaughtered. Bears sell on the way down. Okay, there's a big difference. So if you're a bull waiting for bullishness, in particular in this window, you either buy the double bottom and you buy higher lows, or you don't. And I said the worst case scenario is you give up on the second try because the first try didn't work. First try meaning the third week of August. So anyways, here we are now in the real world. We're what, second to third week of August, and of September, I should say. And this is when we look for bullishness to show up. Irregardless of whatever happened at the ECB, irregardless of what happens at the People's Bank of China, irregardless of the Fed, irregardless of everything, there's still a normal pattern, and we call that seasonality. You still got to harvest your crop at the end of the season. Okay. So this is one of those situations. You're planting your winter crop, so to speak. So anyways, everything is up, and that makes me smile. But I don't know if this is going to stick. I don't know if this is going to last 3 weeks. This is very, very short term. but it's what I expect it to. And that's interesting. Now, looking at this as far as bias, nothing, nothing, nothing. Be careful. I think this shows that we're in a transitionary period. Don't say transitory. Transitionary period from across the board risk off to eventually across the board risk on. That's why I think it's like mix, mix, mix. Volatility is way down, and that's bullish. Yen is weak, that's bullish. Dixie's strong, that's bearish. Yield on the 10-year is going up, that's not good. Okay. Gold, okay, up, that's not good. S&P 500 up, and that is good. So we have this mix. It's not clear. You could look at it like the market is 50-50, and those odds are not good enough. So be careful, but then frame this around your bias. Like we say at Harvard, with your lens. Your lens is your bias. With your bullish lens, look for things to be turning, look for these things to turn green. If you're risk off, then look for these things to turn red. Okay. So, anyways, yeah, cool. I unlocked this tab for you. It's easier to see, right? We can look at euro dollar. Or should we look at gold? Let's just do gold. Gold, because it's at the top. Okay. 20-year average. This is all-time average, but green is 30-year average. Red is 5-year average. Gray is what's happened this year in gold. Okay. Now, one thing to kind of pay attention to is this doesn't necessarily mean up. It means it was up. And in the January, February period, you can see less up is actually what you're thinking. Okay. Was high and then down. Okay. And then, so, anyways, in this period that we're in, it looks like it goes bearish to sideways to up over the next few months. What do you think about that for gold? Some bearishness and then less bearishness into bullishness by year end. Cool. So, anyways, we have this for VIX now. Whoa, what? This is important because you can see, okay, in this July, August period, volatility increases. And then September, October period, there's some down in the VIX. And that's what we see now actually occurring. Okay, as we're rolling into October, November, okay, that period very often could produce less volatility, which is risk on. Because remember, this VIX actually is a measure of how many options are being purchased as protection for the stock market falling. That's actually what it's measuring. So if you own a stock portfolio and you're worried that its value is going to fall and you don't want to sell it, you just want to protect it, use options as a hedge. But you would only pay that money because it costs you money, by the way. So it's unprofitable to do it. It's a hedge, it's insurance. Buying car insurance doesn't make you any money. It just prevents you from losing money in the worst case scenario, right? So, anyways, so if VIX is falling in this period of September, October, November, as it usually does, or in this March, April type period, what that means is owners of the S&P 500 don't believe it's going to fall. They don't need insurance. Okay. So, anyways, interesting. So you can play around with that. Lots of assets for you to go through. You can pull up dollar index, for example. So in the dollar, you can see dollar tends to get strong July to August, and then somewhere around September, October period. Wait, third week of September, maybe it goes from strong to less strong to just full on weak to weak. Okay. Strong. You see the big rally July, August, September. Dollar, US dollar gets strong versus everything. And then somewhere around now, weak. It goes from very strong to not as strong to quite to neutral to actually bearish by the end of the year. Okay. Cool. That's what I prepared for you for. Nice. Do you like this tool? It's nice, isn't it? Yeah. So, anyways, there you go. I forgot to cover this yesterday in the swing trading meeting. Oh. Yeah, oil, obviously the big winner, but only 4%. I mean, that's good, but it's Bitcoin could do that in a day. This is 7 days. And we know it's just been up and up and up and up. Remember the ultimate target, I believe, is 94 is the monthly R3. FTSE recovering, the Nikkei recovering. Bitcoin, a big winner here, but for the last 7 days is only up 1.5%. Not a big deal, but it's all over the place. Holy smokes. DAX is up, Dow is up, S&P 500 is up, gold is up. You're starting to see there's a lot of like financial assets, like the stock markets are all up right now, or many of them. Are any down? No, no, none of them are down for the week. They're going to have a positive week, up 1% or more. And they were sort of down to sideways up until now. And again, I'm trying to frame in my mind that bearishness was wrong. The third week of August, you remember everything that was risk on took off. It looked great. No recession. And then like 4 days later, it was nothing but doom and gloom. The end of the world. It's the end of the world, right? And now we're rotating back into the other narrative. Again, I showed you the seasonality. US dollar tends to get weak very soon. And that weakness would push all those assets up. So maybe it's begun right on schedule is all I'm saying. So you have to decide, is next week the third week of August? Or sorry, I keep saying that. Is next week the third week of September? Then we know it's an important week for risk on. So in my mind, I want to be in and my stops jammed because we know next week is also the Fed meeting. And so they can ruin a good party, can't they? Okay. So I'm looking forward to that. This week is right on schedule. And so I want to make sure I'm on some of these things and stops are jammed. Now, we know, like, for example, I'm long gold on this account. I'm long the S&P 500 on this account. And I intend to hold them to the end of the year or beyond, is what we talked about. And that I took those trades on the third week of August. So now I've been on them almost almost a month, right? Next week will be a month. So we'll see if the seasonality kicks in. CAD strong, Aussie strong, Aussie strong, CAD strong, Kiwi strong, Rand strong, Kiwi strong, CAD strong. What do you think? Commodity play? Yep. I have no problem investing into food. See, when you get hit by inflation, the only thing that matters is something that's tangible. You don't want to own a bond, okay? You want to own gold, but gold doesn't produce income. So you want to own real estate. You want to spend your money on things like food. And if inflation really gets persistent, all you have to do is visit a third world country with super high inflation, and you say to yourself, I need a gun. Eventually, if you go into the zombie apocalypse, you're going to need guns. And then if you've watched Walking Dead, you also need bullets. Realize bullets are even more important than guns. But let's not go there because, well, you know what I'm saying? Because then you can hunt your own food. You either grow your own food, pay someone else to grow your own food, or you hunt, or you pay someone else to hunt for you, right? And then you protect your private property. Hmm. So back to this. Um, Tangible things like commodities. Okay. See, commodities could double, and the 5% yield on your 2-year treasury won't be good enough. Okay. Can you imagine? Treasuries are at 5%, inflation's at 10%, and commodity inflation's at 100%. Could happen. Do you like this tool? Yeah, that's Euro USD. Okay. Just pointing down. It's what you see on the scorecards. It's just bigger. I don't know if it's helpful. Like, is it easier to see? So, target on the S&P 500 this week up to 4570. Best case. Base case 4540. Worst case 45. And we're currently there, right in there. Boy, that's nice though. Okay, we'll have to pay attention to see if the euro Swissy, pound Swissy stays bullish for retail. And today at 4 o'clock, I guess it is, we get the updated commitment of traders data, and we'll see if money rotates out of euro. But today's data will not include yesterday's information. It's from Tuesday's information. So today's update, really, we need next Friday's update to see are institutional investors pulling money out of the euro right now. So you say, well, Wayne, why would they do that? And it has to do with yesterday, the ECB said they're still data dependent, and they could raise interest rates again. They kind of have to talk hawkish because they still have a lot of inflation. Problem is in the ECB, in the Eurozone, and the UK has the same problem. Their GDP is 0.1%. Let's just call it zero. Okay? Because if you were 0.1% alive, all right, the tunnel is even narrowing at that point, right? So, like, dude, their economy is practically dead. So they can't raise interest rates even more. And they actually said that, basically. You could read into it there that what did they say? Their interest rate policy is it just faded on my brain. Appropriately restrictive. I think they something like that. Anyways, so they can't raise anymore. They're done. They're done raising interest rates. Or to say they can't raise interest rates higher now. Now, suddenly, if GDP goes positive because of Chinese stimulus, and all of a sudden, European GDP or UK GDP goes from 0.1 to like 0.5, 0.8, 1.3, okay, then they can raise interest rates a little higher. Take the macroeconomics course again. I make a big deal out of GDP. Most people don't get it. They're like, yeah, some number, something about productivity. I don't get it. Take the macroeconomics course at QuantBox, and I attach it to the human existence. It's that important. And so the ECB wants to raise interest rates, but they can't with that GDP. So anyway, so money might come out of Europe. And that's what we're going to want to start tracking with the COT data. But the Commodities Futures Trading Commission will not update us on euro for a week. Next Friday, we're going to look at this and see if there's an exodus out of euro long and a move toward euro short. Okay. You could even see last week we got some more euro short and it's starting to shift. And so this will update, and I imagine it'll be the same. Okay. Less bulls, more bears. And this will change a little bit, right? This will change a little bit, a little less long, a little more short. And then I have a feeling based on yesterday's ECB meeting, I'm supposing there's a significant decline in bulls and a significant increase in bears. And that would be a fundamental trend because of the change in policy. No, I want to do this. So they still don't have guidance for us. Okay, still no guidance, but the idea is no more up. We're not on our way to 5% in the short term, but they're still not providing guidance. Okay, go back to the dashboard. Oil, I'm a little concerned about. Euro dollar. Okay. So here's the thing with the euro. Everything is bearish. The seasonality turns bullish in a couple of weeks. Will that be enough to overrun this? To override the bearishness? I don't know. Depends on how much this changes, right? Here's that COT data we just looked at. Depends if this changes or not. Maybe Europe gets so cheap that you want to buy the European stock market or something like that because American stock market becomes too expensive. Who knows? But it's interesting to see this. Have we ever seen a negative 10 before? I don't think so, have we? So, anyways, sell rallies, maybe, right? It irks me, though, if I may irk in public. It irks me um, that dollar, quote unquote, should get weak. So I'm wondering if I don't want to buy the dollar, but I do want to sell the euro, is there something better I can do? And we look at those commodity pairs. And now, and we talked about this in the swing trading group last night at Investor Boot Camp. Euro Aussie, Euro CAD might be the better play. Okay. Here's a nice little skippity scalpity. You can see boom, 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 boom. And this is going to be where the future 5 EMA is on that time frame. So there's yesterday's ECB move, rally up. And who knows, there might be one more correction. Let's look at it this way. And down, okay, up. And then like this is probably the plan. I don't know if that's the future, but technically that might be the plan. I've highlighted this area already as I was trading earlier this morning, and that's just old support. So as long as we're below that, I can be a technical bear. Because on a higher time frame, it just looks like this. That you don't see all the little waves. Okay. I also know that there's support below us here. So let me show you. Let me give it a click or 2 or 5 or 10. How many clicks must have meant? There we go. So you take this lowest low. No, 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 no. No, look at that. You think it's a coincidence? You're like random walk down Wall Street. Oh, you can't predict the future. Really? Really? Okay. So amazing, huh? Clearly important. The thing is, can we make a lower low today? That's right. Jim's like says we're also on monthly M1. That is correct. Yeah. Yeah. I'm not going to bring that up on that chart, but yeah, I concur. I do concur. It's on a chart behind me. All right. Aussie dog. Okay. But anyways, I don't want to be on this. I want to do a cross pair. So actually, let's do that. Let me pull up the QB again and let's look at a cross pair. And we look at Euro Aussie this time of year. And I can see it's neutral here, but let's try to predict the future from September, October to November to December. Okay. So from the 1st of September, it's actually probably late August, from the third week of August, let's say, excuse me, all the way down to December, this currency pair tends to fall. Oh, hmm. And this is unfavorable in the moment because institutional investors have been, remember, that's the past. Past performance does not predict future results. This is quantitative data. It's not wrong, it's fact. Investors used to be long euro. That might have changed as of yesterday at 8:15 a.m. New York time. So I could predict, woo, right? In 2 weeks, the COT data is going to update and institutional investors will be less long euro. Oh. Also, institutional investors have been not favoring the Aussie, but actually shorting it. That makes sense to me. China was in a free fall, but this week they've started some stimulus. They've started cutting interest rates and they've cut the RRR, the reserve requirement ratio. They're starting to do something. They realize negative PMI ain't good. Okay. So something in China is happening, something that might stabilize their economy. This is one reason why commodities might be rallying right now. And so maybe iron ore and coal sales will go up in the future. Now, I know right now that the coal industry in China is producing a lot less coal than normal. Well, they don't need it if the economy is going into recession. They don't need a lot of coal to produce electricity for factories that are closed because they're not producing anything. But if anything changes and if it changes quickly, they're going to have low supplies of coal and they're going to suddenly need coal from other suppliers outside of the borders and maybe they buy from Australia. I don't know. It's a bit of a stretch, but stimulus is stimulus. So maybe that helps Australia. We don't see it here because it's not in the data yet. It might be happening today, but it doesn't get recorded and reported for probably 5 weeks, 6 weeks for all these things to get into the economics data. So looking forward, all right, well, seasonally, it should fall. And logically, euro might weaken. Logically, Aussie might strengthen. And therefore, this makes a ton of sense. And this neutral eventually turns bearish. Hasn't happened yet, but I think a lot of the opportunities for you in QuantBox are not the things that say very bullish or very bearish, because those things have already happened. Quantitatively, you can look at it. Look, it's very bullish. It's factual. Okay. So it's what's next that you should be looking at. And so these neutral pairs are good because things do change from bullish to bearish and bearish and bullish and all that kind of stuff. And this is actually QuantBox's own back testing, if you will. And if you want to look at Euro Aussie, there it is. Oh, I double clicked, didn't I? I do that. I double click, but I don't double dip. There we go. Okay, so you can see going way back in January here, QuantBox was bearish, but then eventually it rolled over and this asset became bullish. QuantBox became bullish. And then kind of, here it is. Red down means QuantBox is reporting bearish. And then here, since the first day, I guess the last day of July, first day of August, this asset became bullish. But now maybe it's starting to decline. And you can maybe start thinking about maybe being a bear. Maybe trying to be a bear. Maybe. Or you wait, it's going to take a few days and you wait for it to become bearish. Sort of like here, do you expect this to become bearish? And then is it bearish? So having this seasonality is very helpful. So when you're threading together investing ideas, like I want to be short Euro, but I'm considering going long Aussie. So you can go to seasonality and then double check. Well, what usually happens? Okay. September is somewhat bullish, but by October, bearish or neutral. And by November to December, very bearish. Well, snap, maybe that's where we're going. Maybe. Okay. Peak, down, down. Peak, down, down. 60 to 90 days of down. Maybe. Does that support or deny your hypotheses? In this case, we're thinking, well, if the ECB is not going to raise interest rates anymore because their economy can't take it, then we have an economic corpse. So, yeah, maybe I want to sell Euro. Okay, great. Do I want to buy Aussie? Well, it's my commodity play. It's my China play. Chinese stimulus, increase in demand for Aussie. Okay. But also some seasonality is in play too. So does it deny your hypotheses? No, it supports your hypotheses. So we don't know the future, but it doesn't look half bad. So maybe that's the narrative. And so therefore you go to your Euro Aussie and you say, let me go from weekly to hourly. And you say, hey, this is the projected high for the month of September. Is that right? Wait, no. No, is that annual? Wait. Is that the annual high? Oh my God, it's the annual high. Oh my God. So, anyways, it's the annual high. That's the conservative projected high for the entire year. And what does QuantBox tell you with seasonality? Oh, I don't know. Somewhere in this time of year, we see a peak and then it falls all the way down to basically December. Kind of puts that into context, right? Like you don't know exactly when. It could have been this week. 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 Okay. But we know somewhere in that period, we'll call it a window, this peaks and very often heads that way. Sweet. Sweet. Okay. So technically, this seems to be supportive. And if we're lucky, If we're lucky, it pulls back a little bit and down. But this was a fundamental change. The ECB was a fundamental change. So maybe it just doesn't pull back that much for a while. Maybe it needs to go this low before it heads up. So anyways, cool. So my name is Wayne McDonald. It's 7:16 in the morning. That's my story, and I'm sticking to it. Thank you for being a subscriber to QuantBox. I built this for you. So I'm glad that we are sharing it. If you're on YouTube, kick down, come clean, don't be a holdout machine. Take this trial for $7.90 for crying out loud. It just might give you the confidence you need. It certainly gives you the information. But ultimately, the information is great, but the confidence is what's necessary for you to be a success as a trader and investor. So peace on earth. May the pips be with you. May your profits be above average. Have a great day.